What if I told you there's two AI companies that are flying under the radar right now? These companies have backing from the huge tech giants, and we're going to run through the numbers in this video, and you'll see that they're the real deal with massive opportunity ahead. Now, stick around to the end, and I'm going to show you exactly how I'm trading them, and most importantly, why they are the stocks to follow the rest of this year and beyond. Should be a fun video for you here today. One thing I ask, one thing only, smash that like button down below. If you like, you're welcome to subscribe as well. I appreciate each and every one of you. And with that, let's jump into the video. GitLab stands out as the most comprehensive AI DevOps security platform, enabling organizations to accelerate software development, improve security, and streamline IT operations. Its open source foundation and flexible deployment options, including public cloud, private cloud, and on-premise, allow companies to innovate and deploy faster with fewer operational hurdles. They have strong backing and industry validation as well. Google invested early, and they own a 3.8% stake in GitLab. This was even before GitLab went public, and it underscores the platform's credibility and long-term potential. This backing, combined with GitLab's ability to bring together code development, security, and operations in one unified platform, positions it as a trusted partner for enterprises seeking to modernize their tech stack. GitLab just reported an impressive financial performance for Q1. Revenue came in at $214.5 million, representing a 27% year-over-year increase. Profitability, non-GAAP operating margin was 12%, a significant improvement from a non-GAAP operating margin of minus 2% in the prior year, and non-GAAP net income per share was 17 cents, up sharply from 3 cents the prior year. Cash flow operating was $106 million, up from $38.1 million in Q1 of 2024, and non-GAAP adjusted free cash flow was $104 million, up from $37 million, demonstrating strong cash generation. As far as operational and strategic highlights, GitLab's AI native platform strategy and the launch of GitLab 18 with new AI and DevOps features contributed to a strong enterprise adoption and revenue momentum. The company's platform approach and focus on integrating AI capabilities within the enterprise control were cited as key drivers moving forward. So GitLab beat on the top and bottom lines, but they guided slightly lower than the consensus estimates, which is still 20% growth moving forward. So I think it's a huge buying opportunity right now for GitLab. All right, guys, here's how I'm trading GitLab right now. Actually, let's take a look real quick on Yahoo Finance. Here's GitLab, and you can see the 1 year chart way down. They've got $63 as a target. It's at 44 now. It's down 9% today on that guidance on the earnings beat, which is unbelievable to me. I think that makes it a buy. If we look at the statistics here tab, we can see the forward PE is 67, so a little bit high. The PEG ratio they don't have. Price to sales actually is 10. That's an attractive price for GitLab. You can see it was up at 12, 13, and 20 prior. If we go to the analysis tab, you can see the three beats. They just beat for Q1, and you can see the revenue guidance or revenue versus earnings growing consistently, and all the analysts buy and strong buy ratings. And most importantly, it's a growth stock, and you can see 23% growth estimated for next year. So over 20%. 10p price to sales to me makes it a great buy, and why I'm long GitLab. And you can see the 1 year chart here. I've got the Bollinger Bands. I've got the green 50-day moving average below the 200. I'd like to see it breaking through or moving up above it. We're not quite there yet, so maybe a little bit early, but hey, if we were waiting for a pullback, we just got it today on an earnings beat. So for me, this is a great trade. I'll go to the trade tab. Again, guys, this is the Tasty Trade option trading platform, one of the best. There's a link down below, and benefits if you go through my link. It's the one I use and recommend. I'm going to look at the March. I'm going to do a poor man's covered call. So the Leaps option, we're going to go out 282 days, so almost a year. Let's see the difference between that and the March 2026. The March 2026, we can go 282 or June 372. Because of the short-term pullback, I'm just going to go to March. We can go to the 40 for 1130. Let's see what June 40, 1270, another $150, but I think we're good in March. So we're going to go deep in the money, 67 delta. We're going to buy calls on the left, the 40 strike for $12.10. Actually, mid price is $11.40. One contract controls 100 shares of stock. So in order to control 100 shares of stock at $44, it would be $4,400. We're controlling that for 1/4 that price, $1,140. Basically $10.75 right now. If we go to the curve mode and analysis tab, you can see as the price goes up, our profitability goes up as well. So if we get up to that 63, 64 target that they've got on Yahoo, the P&L at expiration is $1,230. So that's a double on our investment. Now, what we can do also, rather than just keep on the Leaps option right now, I'm going to sell the call against it. The short-term call. I like to go 30 to 45 days out. So we're going to go to the July 18th. And I would sell, we're at 44 right now. We could sell the 45 and collect $2.15. So if it doesn't pull back, that's just locking in $215 profit in the next 37 days. So any pullback further, we keep that 215 and we hang on to our Leaps. Or we can go to the 47.5, the 34 delta. This is a little bit, it allows more upside up to 47.5. And because of the pullback, that's what I'm going to do. And you see that the $1.30 that goes into our pocket when we hit review and send and place this trade decreases the cost of that Leaps option. So we're down to $9.65 right now. So we hit review and send and place the trade. You might think CoreWeave is a meme stock. Don't be fooled. Let's dive into its fundamentals and partnerships. CoreWeave is the fastest scaling infrastructure cloud company on the planet, specializing in AI-focused cloud computing powered by GPU accelerators rather than traditional CPUs. Its platform is designed to meet the massive computational demands of advanced AI applications, making it a critical player in the AI infrastructure space. They also have some high-profile partnerships and backlog on the books. The company has secured huge multi-billion-dollar contracts with industry giants such as OpenAI, Microsoft, Meta, and IBM. Notably, Microsoft alone accounted for 62% of CoreWeave's revenue in 2024, while OpenAI committed up to $11.9 billion through 2030 for GPU power to run ChatGPT and future AI models. These contracts provide a strong revenue backlog, $25.9 billion as of Q1 2025, offering significant visibility into future growth. CoreWeave's revenue surged 420% year over year in Q1 2025 to $981.6 million, beating analyst expectations. The company forecasts 2025 revenue between $4.9 billion and $5.1 billion, reflecting robust demand for its AI infrastructure. However, it's still unprofitable, with a net loss of $314.6 million in Q1, driven largely by heavy investments in scaling operations and capital expenditures, which are projected to reach $20 to $23 billion in 2025. So it's not without risk. Its heavy reliance on Microsoft for over half of its revenue means any disruption in the relationship could severely impact the stock. Additionally, the company's large debt load and high burn rate require it to continue hitting aggressive growth targets. Microsoft's known strategy of vertical integration could pose a competitive threat if it decides to build its own infrastructure at scale. So CoreWeave is far from a meme stock. It's massive backlog, it's backing by NVIDIA, and just being in the AI infrastructure sector is the reason I'm long in CoreWeave. So let's jump into the trade on the option trading platform, and I'll show you exactly what I'm doing. Okay, guys, here's how I'm trading CoreWeave going forward. Same strategy, leaps, poor man's covered call. So we're going to buy deep in the money leaps. I'm going to go to the March 282 days out again, open up that option chain. Calls are on the left. I'm going to go to the 140 call, $25. So $2,500. Mid price is $24. So $2,400 versus at 148, that would be 14,800 that you would need to pay to own 100 shares of stock. We're going to control those same 100 shares for only 2,400, and the market's open, so it's changing as we speak. Now, we talked about the way that it improves, your profit it rises just like owning the stock outright. So as it moves up, we make more profit. So let's go back to the table mode. We'll close out the March, and we're going to sell 30 to 45 days out. So I'm going to go to the July option chain and open that up. That's 37 days to expiration. We'll open that up, and to sell is on the left, to buy is on the right. So we bought the leaps. Now we're going to sell a call against it. Now there's no extra buying power. You can see the buying power that's required is $2,450. So it's exactly what that cost is. That's the max we could lose if it drops, versus owning the stock, you could lose a lot more. Now we're going to sell against it. We can sell the 160. That's the 43 delta. So we've got $12 upside on the leaps that we can obtain, and this is $1,030 that we collect. So that brings down the cost of the contract by $1,000, and now it's $1,395. We hit review and send and place the trade. All right, be sure and download the free options workshop in the link below. Remember to like and subscribe. If you like this video, make sure you watch this next one. Thanks for watching. I'll see you in the next video.